Hi, everyone, and welcome to yet another edition of our Corporate Venturing podcast. Today, we're going to zoom in on a specific topic, a specific industry, banking. We saw that there is a high number of newly formed banking partnerships, remarkably higher since 2018 today. And these partnerships also include a lot of partnership with younger companies. And I'm happy to have a few guests today with me that can give some more insights as to how and why these banking partnerships are formed. So first of all, welcome Rik Coeckelbergs.
Thank you very much for inviting me. Really excited to be here. My name is Rik Coeckelbergs. I am the founder of the Banking Scene, an informal network organization for bankers and more in general for the banking industry. And my mission is to get a view about what's coming next and to share that with others as well. And part of that also comes back in the Banking Scene After Work. It's a weekly virtual roundtable session that I'm hosting now for about 15 months since the beginning of the COVID pandemic, where every week we have 1, 2, sometimes 3 central guests to talk about exactly this kind of topics that we will be discussing here. So I'm very glad that I can share a couple of those insights here in this podcast with you.
Really great. So you're bringing all the knowledge of yourself, but also all your past guests. So that sounds amazing. I also have 2 colleagues with me. Gregory, welcome.
Thank you, Elise. Very happy to be here too. My name is Gregory Joos. I'm leading PwC's financial services practice in Belgium. I have 24 years of experience in working with bankers. And recently also more and more with fintechs. So looking forward to interact with you.
Great. Olivier, also a colleague, PwC colleague, welcome as well.
Thank you for inviting me, Elise. I'm Olivier Duron, and I'm a manager at PwC working in the team of Gregory on various risk and compliance matters. But when not on assignment, I also do some research in the market from time to time, and I think part of that research is what we will be discussing today. So happy to get into it.
Exactly. Thanks a lot for joining. Rik, you already briefly introduced the banking scene, but maybe there's a bit more you want to tell also how the banking scene came to life. I think for the listeners that don't know the banking scene yet, that could be very relevant.
All right. The banking scene is a project that I started as more as a side hustle when I was still working in a bank. At a moment that fintech companies, these young companies that were transforming financial services as we know it, believed that they were going to take over the financial world, so to say. That was back in 2016, 2017, when I thought that banks still have a future and they deserve at least one day to be proud to be a banker. So I started organizing this yearly conference. That's what the banking scene started with. And after a couple of years, reaching up to 360 attendees, I think it was time for me to leave the bank and to get more space and more freedom to start sharing my own opinion on where the industry is going. So that's actually the basis of the banking scene. And today that gives me a platform to find the time and to speak to people that are currently shaping this future and that help me getting a better idea of where we're moving to. And today it has become a platform where we have physical activities both in Brussels, the big conference, smaller one in Luxembourg. The plan was in 2020 to have one in Amsterdam as well. Hopefully that will come back in 2021. And in the meantime, we have these virtual roundtables, the banking scene after work.
Great. Thanks a lot for sharing that. Gregory, Olivier, one of the topics, of course, that you want to talk about is the banking study, the partnerships in banking study that you briefly already touched upon. It's a recent study of PwC Belgium. Can you tell a bit more about the how and the why of this partnership study?
Yes, absolutely. Well, first of all, we were inspired by the development of ecosystems in the financial services globally. and the frequent banking partnership announcements in Belgium press. Well, we had, of course, a feeling that in Belgium this was also a growing phenomenon, but we really wanted to underpin this with data. So that was the first objective. The second objective of the study was to get a better understanding of the nature and the different drivers of these partnerships, to better understand the trends and also see how they might evolve going forward and how we could kind of predict what would come.
Maybe Olivier, you also have some insights to add to that.
Well, I can go a little bit further into how we actually made the study. We chose to look mainly at publicly available information. So we chose to focus on any mentioning of partnerships in the Belgian banking sector that we found in press articles or annual reports and disclosures from the banks themselves. And that was really the foundation where we drew our data from. Based on that, we also decided to go back quite a few years. We went back about 7 years into time to be able to form kind of a benchmarking from year to year and see whether any storyline was developing as we go into more recent years. And I think all in all, we ended up with more than 200 practical partnerships that we could identify in this manner. So it was quite a rich data set. And once we had that, it was mostly a question of correctly labeling each and every one of them and bucketing them into various categories, and then trying to dig a little deeper into each of those categories. That's kind of how the study took shape.
Okay, great. And I read the study and I noticed that there's 4 large or important reasons on why banks team up with partners. The first one being improvement of their product offerings. The second one being access to new technologies, but also access to their partners' network. And the fourth one, CSR. But the 2 first one, improving the product offering and access to new technologies, actually are the driver for over 80% of the partnerships. So I wanted to have a bit of a closer look to the first one, improving product offerings. I think we're seeing a really big change in what is considered a banking solution. Traditional solutions include payments, investments, and credits. And the majority of the partnerships are focused on solutions that are far beyond that traditional banking offerings, partnering up around mobility, housing, discounts, loyalty programs. Maybe Olivier, what do you think is the reason for this shift, and how do you see this evolving any further?
Yeah, well, it's like you say, Elise. As we looked at the data more and more recently, we saw that indeed most of the partnerships that we identified were between a bank and a firm that was not related to financial services. And so this is the well-known beyond banking trends, and it was quite astonishing to see how much the focus was on this kind of partnership, especially if you looked at the partnerships of the 4 larger Belgian banks. And if to go into your question on what the reason behind this might be, I think that one of the reasons is definitely the diversification of the revenue streams of the banks. And we all know that Belgian banks are, of course, largely dependent on their net interest margins for income, and this is a part of their income which is, of course, under pressure. It has been under pressure for quite some time, for more than a decade actually, since the financial crisis, and we see that the low interest rate environment, which is kind of a major reason for this pressure on interest margins, this low interest rate environment is pretty much here to stay. Also, if you look at all of the COVID-induced financial stimulus from the central banks, so there their interest margins are under pressure. And by partnering with non-financial services firms and expanding their service offering beyond traditional banking, it creates the opportunity for additional revenue streams that are not always interest margin related. They are often the business model behind them is some sort of a subscription or a fee-based model. So that's definitely one of the reasons. I think another reason for banks to go into this beyond banking pathway is to increase what they call the customer stickiness. And so it's pretty much to make it so that your banking app is not just a place where your customer goes for payments, but for many other daily needs he could have throughout his day, whether it is to pay for his parking tickets, or look for a train ticket. That's just a mobility aspect of an ecosystem. But that's I think really one of those reasons.
Great, thank you. Maybe Gregory, some insights to add.
No, just wanted to add, I fully agree with everything what Olivier has been saying, certainly about the need for banks to diversify their revenue streams. Although when we look at the recent partnerships, the revenue side of that is not always obvious, or in a number of cases it will be rather marginal. And personally, I think that the customer stickiness is the most important part in that, and referring to what Olivier was saying. So the daily needs, I think that's the most important element, because if the banks are not taking that role, someone else will take it, and someone else will provide an answer to those daily needs and add banking services behind it. And at that moment, the bank is losing the relationship with the customer, becomes a product factory, which can also be a model, of course, but will lose part of the margin and part of the value chain.
Yeah, I'm sure, Rik, that you also have some thoughts on this.
Yeah, I agree with both. Of course, banks are under pressure and they need to find new revenues, but there are many examples where banks do not make any revenues, or at least they're currently just trying to find new ways to attract new customers. Take PwC's example and the partnership with Jupiler Pro League. As such, their customers are not gonna add new revenue because of that, only if they can be convinced to go for a more premium account. So they're testing today, and why are they testing? Because software technology is currently getting so cheap that at least the big boys can start playing around and can start testing models out of fear of big tech. That's a fear that they regularly mention in the press, and whether that is relevant or not, I'm not going to start that discussion here now. But they are afraid of these big tech companies who offer everything. So you have a few banks that now try to build something similar in their own banking app. I was happily surprised that my bank recently asked me if they can help me with my vaccination passport. Has nothing to do with banking and will not generate any additional fees, according to me. But it does create stickiness, as Gregory mentioned. On the other hand, there are smaller banks who cannot bet on everything, of course, and they need to make smart choices. And they do that through partnerships to reduce the cost of building everything. Because through partnerships, you have these economies of scale and it becomes easier to start setting up new models. And banks have to diversify today. I mean, if you look at the past, how did banks make a difference? That was by their geographical location. Today, everyone has an app and everyone is offering somehow the same service. So now they need to start reinventing themselves and try to create this unique brand, this unique identity that resonates to the customer. And that's the big challenge today of banks, I think.
Great. So you foresee a lot of exciting and unexpected things still to happen when it comes
Absolutely.
to
And as Gregory mentioned, the idea of a bank being a product factory, that it's not so bad, is definitely true. And I think it's a topic that we will discuss later today. The whole hype of embedded finance, where banks will look for partners that will start selling products for them. As such, it's not new in the physical world, where the banks have always worked with independents that sold products for them. But today, all of that is getting digitized and it's getting a new form. And that's very exciting to follow up.
Mm-hmm. Yeah. Of course, the red thread of this podcast is about corporate venturing. So I was happy to see that a lot of the partnerships that are mentioned in this study are partnerships between the larger banks or banks in general and younger startups. I'm thinking of Belfius joining Skipper's Series A round recently, but also BNP investing in Optimile, AXA teaming up with Gambit, or KBC joining forces with Cashforce and Bright Analytics. And I think many guests before on this podcast series indicated the struggle for large institutions and young ventures to work together. Obviously, there is a difference in culture, but also in agility and structure. And I think in terms of large institutions, it doesn't get much bigger and more regulated than banks. There's heavy regulation, compliance. The procurement process isn't easy. Does anyone, and maybe Rik, we can start with you, have any insights on how long it takes for these partnerships to take form, but also how they can be successful and overcome these struggles?
I think it's very hard to generalize, for example, the period to go from a discussion to a concrete partnership and implementation. That really depends from case to case. So I can't give you a solid answer to that, but I can share that recently, last month, I think we invited Rita Martens. She's head of fintech partnerships for the finance and risk department of HSBC Group, and we discussed exactly this kind of things. And you see that indeed there is this cultural struggle between startups. They are very enthusiastic about their idea, and then they go to the big bank that is looking for relevant, bright ideas, but of course they also have a lot of regulations and compliance to adhere to. So one of the suggestions she made is these startups, make sure that you are well connected, that you have these senior advisors with experience in the banking industry, so you talk the same language. And it's very similar to relationships that humans have between each other. If you can't speak the same language, it's a lot easier to build this relationship and everything else will go a lot smoother. So communication is very important and often underestimated, I think. If a startup understands the regulatory challenges that their potential partner has, and they can anticipate on that, everything else will go a lot more seamless. Another advice she gave is, if you are negotiating with a bank, involve every stakeholder, not just C-level people. And by involving every stakeholder, we'll also create a lot more involvement from the entire organization, and much faster in the process, you will understand what the potential bottlenecks are during the whole due diligence phase and later the implementation phase. So those are a couple of tips and tricks and pitfalls that she gave out of her personal experience.
Yeah, very interesting. Gregory, I'm sure you can also add some experiences to that, right?
Yeah, no, fully agree. It's two worlds coming together, and that's also the beauty, because if a bank has to innovate, well, this is a real challenge, because there are indeed subject to a lot of rules and regulation internally, but also they have very heavy processes with respect to IT developments and so on, and so that means that the speed they can go to the market with new ideas is probably much slower than with a young startup. Also, the risk is different. A young startup with, let's say, 500 clients can take the risk to make an experiment. I mean, if there is a bug in a new release, they will impact 500 clients. If a bank is taking that risk, they will impact 1 million or more clients, and they will be all over the newspaper. So reputationally, there is much more at stake. But the challenge is really to build that trust between both, and well, that's not easy, and it's really two cultures coming together. But indeed, making sure that those startups understand the world with which they want to partner, I think is key. At PwC, we have our scale up program, where recently we had 10 startups participating, and it's a program with a number of masterclasses, where exactly we spend a lot of time on explaining what the regulated environment was, because we think it's important in their development.
Yeah, exactly. And I think for us also, the scale program, the acceleration program that we run, is also important for us to play a part in forming those partnerships. So making sure that parties that could be interested in working together meet each other. So yeah, Olivier, maybe some additions from your side on this topic.
I don't really have any any remarks on this particular question, Elise.
Okay. So maybe on to the next question then. In Belgium, we do see that there are a lot of large institutional banks that are partnering up with disruptive companies. But if we look outside of Belgium, we also see that a lot of new companies have arrived, and they're looking to disrupt the banking sector itself. I think most of us know N26, Revolut, a bit of the new kids on the block. And they often have a no borders and all currencies mindset. So traditional banks are usually very powerful in their local territory, while these new banks or these new disruptors look at it from a more international angle. What are your thoughts on these international players and these new kids on the block? Yes, Olivier, please.
I can maybe start by saying that in doing the market research on the partnership study, we came across some interesting data about how some of these larger neobanks like Revolut and N26 are faring in various EU member states. And out of that market research, I think it was from 2019, it was clear that in the Belgian markets, in terms of customer size, these larger neobanks have actually a lot less traction than they have in larger member states like France or Germany. So Belgium is not really a huge customer pool as of today for these larger neobanks. What the reasonings behind that exactly are, why that is, I'm not exactly sure, but I'm just pointing it out.
Yeah, maybe Rik. Also good to hear from you on this.
I think being a global brand is an opportunity, but it's also risk. And then if you N26, why are they very popular and very big in Germany and not so much in Belgium, is because they were built initially for a German market or international market, but they miss all the local details, the local cultural elements that today convince a Belgian customer to bank with a Belgian bank. Now in Belgium we're also spoiled, of course. We have a very innovative and very digital banking environment that is not expensive at all compared, for example, if you look if we look at ourselves for daily banking services, maybe we have it all for free at some banks. Some others will charge, but will not. On average, it will not be above €50 a year. If you look at France, it will easily go over 100 euros. So there is a very concrete financial incentive to investigate other options. And these new banks are very often cheaper options because what they're looking for is scale to convince investors to spend more money so they can build more business on the longer term. And maybe in the future, they have all the potential to also investigate these local opportunities and the local relevant points to attract local customers in more difficult markets like Belgium. But right now, they're not there yet. And right now, you also see that some of these players initially started with a payment institution license that were a lot less regulated. Then they quickly wanted to transform to a banking license. They need a lot more regulation and a lot more identification points from their customers that were initially attracted by simply giving a prepaid card. And that's where they're currently being challenged as well. Both Revolut and N26 got the got in the newspapers quite a few times on AML issues. So it's definitely a challenge for these newcomers, and I think an opportunity for more local banks to get an advantage. What's the word again? Voorsprong.
Head start.
Yeah, to have a head start.
Yeah. Gregory, is that also something that resonates with you?
No, absolutely. I think that the Belgian banks did a good job in their digitalization. I think when you look at the apps of our Belgian banks, we have quite a lot of nice functionalities in there and services, and so that helps to keep those new players out. And well, to add on what Rik indicated, when you have an app which is built for the German market initially, well, why was it built for the German market or UK market or French market? Well, because those markets are bigger, and it's clear that if you want to launch a new bank, well, you look at the market where you can scale rapidly, and for that, well, Belgium is quite overbanked already, and the market is smaller. So it's clear that this is probably not the best country to start with such an initiative.
Yes, Rik, I see that you have something to say.
Yeah, a very short note, because today you see Belgian newcomers entering the market as well. I think this year we already had 3 of them, with Newbie becoming a proper bank. We had Ion Bank, of course, with the oldest banking license in Europe, but they completely transformed, becoming a new bank and now offering a new business, at least in a new business model, offering new banking services in a subscription way. There is this app that is focusing on pure young people. Next year we will have Nickel. They come over from France, but they are backed by BNP Paribas, so they know the local markets, and it's going to be very excited to evaluate how successful they will be, because they have a lot more local touch with the market, and they have probably also, because of that, more potential to be successful compared to these huge mastodons that may be struggling in the coming years to maintain that growth or maintain the success that they used to have.
There's also a new bank called Swoon, I think, who is going to launch this month in Belgium, but they're based out of Lille, Rijssel, and I think they're going to focus from day one on the Belgian, Luxembourgish, and French markets. But yet to be seen whether they can successfully grow in Belgium. I think the challenger bank story is in Belgium, and whether or not they can be successful, or what the limits to their success can be. I think that's something we still has to be seen. I think we're in the early stages of these neobanks entering into our market.
Yeah, thanks a lot. Maybe moving on to unfortunately our last question, making sure that we stick into the time frame. I think, Rik, I read a very interesting article on the banking scene. It was written in May last year about the envisaged impact of COVID on fintech companies. So quite early on in the COVID pandemic. And one of the questions in a survey that you held indicated that most banking experts believe that COVID would really change banking, but more specifically banking fintech relationships, making human trust and relationship building more important than ever. So collaborations being built in a few very committed partnerships instead of loose collaboration between acquainted parties. So we're 1 year further. I'm curious to see how you feel that projection aged and how it looks like today.
Well, in a way, that prediction is still true. We have, of course, pretty good experts with the CEO of Holland Fintech. We had Don Ginsel, we had Do van Acht from Fintech Belgium. So we had the right people around the virtual table to discuss these topics. And if you look back the last 12 months, maybe we were a bit too negative because we were just in the beginning of COVID. I recently did a survey on a similar topic for the Luxembourg market, and the message I got in the many interviews with the executives over there was that the period prior to summer, there was a lot of fear, and people were just, or banks were just trying to keep doing their business, building on operational resiliency. But during summer, it quickly became clear that banks needed to speed up digitization to remain resilient in the future. And that means that you need to find partnerships for digital onboarding, digital signatures, but also a lot more deeper digitization, like this structural solution for video banking, etc. So fintech bank relationships are definitely going to stay. And I think the idea that the human aspect, human relationship building is still definitely important. And that's a challenge, I think, for new startups. So here you have an opportunity for the scale-up companies that already build a network prior to COVID, because, well, you and I all know that in Zoom, it's not the ideal circumstance to build relationships. So you need this human contact to really build good relationships, and that's very often you find the best solutions at the coffee machine. So I think that statement still makes sense. Do banks only look for these very committed relationships? That was probably a more negative sentiment because of the circumstances back then. I think today they're more open again, and open banking and embedded finance have never been more popular than today. And that will probably remain in the near future. So a simple API-based relationship, those kind of relationships will grow in the future. And that's a relationship where you don't need a lot of commitment anymore, because it's a simple integration of some code that you get somewhere. So yeah, that's my take on this.
Yes, maybe. Yeah,
you could go even further and say that in a PSD2 context, if you're talking about an API-based collaboration, that the collaboration, so to speak, is not even done voluntarily, in the sense that the bank has to collaborate with some external parties currently for payment accounts, of course. But who knows in the future if the regulation at the European level goes further and says that banks have to be even more open in sharing other types of accounts than current accounts, then the potential for this API-based forced collaboration, I should say, becomes even greater. But I think also reinforcing Rik's points, we also saw in doing the partnership study that the frequency of partnership announcements and examples that we found. Goes, of course, beyond fintech. It's partnerships in the broad sense, but we saw that it just kept steadily increasing even throughout the COVID pandemic. So I think it clearly stresses how strategic of an issue that this was, and the pandemic didn't really put a dent into the partnership trend.
I like to add two points on that. On the one hand, to come back on the story of APIs, I think today banks built a platform to be PSD2 compliant, and we know that probably regulation will enforce more APIs in the future. But right now, a lot of banks are investigating the opportunities to build sustainable business cases on these platforms, because right now they have to provide it all free of charge, and they have a very good platform available where they can also make a fee business if they find the right offerings to these fintechs to go beyond simple regulations. So I think not every bank is going to wait for new regulations to build new APIs, and right now they are all investigating already what can be done in between. And then the other point, I forgot the other point. Olivier, what was your last point again?
My point on the frequency of partnership, that I saw that the partnerships kept on going through the COVID pandemic.
Prior to COVID, you saw that banks would be a lot more positive about starting partnerships with young, new companies. I think today you see people or banks, investors, overall, there's never been more investment in fintech than today. But they are more strict. I think it's the scale-ups of today that are getting all the money, and the startups that keep struggling to find the required investments to make their case.
Yeah, I think we definitely saw that the appetite for meeting fintechs is very high. Gregory, I think in our acceleration program, there was a lot of interest of banks to meet the fintechs that we were working on. So I think we can confirm the part on the appetite. Yeah. Okay. Then I would like to thank you all for sharing your insights, taking the time to join us today. And I wish you all a very good day, and of course also to the people listening.
Thanks a lot.
Thank you.
Thank you, Elise.
Bye.
Bye.